This is Supriya Srinath from the New Delhi studio of ET Now. You're saying the bottoming out process is continuing. We're going to get you more details in just a while on the internal breakup. The ET Now poll was, of course, 4.7. This is 4.6. The question really is, will you see and do you presume and do you believe that things will shift to boosting growth here in New Delhi and also on Mint Street? Or will things continue to chase reining in inflation?
I do feel that, first of all, the change in the sentiment on account of a new government and the fact that we have, a pretty determined, government which is kind of clearly right on the job right from day one, is a big positive for the economy. I think the first thing that we need to see is, clearing up of the stuck-up projects. We need to see some kind of investment process, kick-starting in this country, and I think that's something which is absolutely essential if we need to see a revival of the GDP growth. So I do feel that the new government seems to be pretty serious about it, and I think that should help us revive some of the lost optimism over the last few years, and that's absolutely critical for us to see a revival in the growth. So it does feel like, while it might take a little time, we don't expect that to happen immediately, at least not in this quarter, but it does feel like from the second half of this year we should see that process sort of kick in. Also, we do feel that there will be some hope in hand on account of a revival in the export growth, as the US economy is expected to do better in the second half of this calendar year. So I think that's also something which should also help in terms of lifting up the GDP numbers.
It's interesting that you speak about exports, because markets, and especially the developed markets, which are traditionally our big buyers, are beginning to look up, are beginning to look steady. But before I go any further, does the agriculture growth at 6.3 come as a pleasant surprise? And how much of hopes are you really pinning on that, considering there is this whole talk of El Nino as far as monsoons this year is concerned? Do you think that could be party pooper?
Do remember that last year we had a decent monsoon season. And we were expecting a pickup in the agricultural growth to happen. In fact, our expectation of a small uptick in the GDP growth was driven by the fact that we were expecting a better output on the agricultural side, and that better output to offset some of the weakness that was prevailing in the manufacturing side. So no, it doesn't come as a big surprise. It's certainly in line with what our expectations were.
Before I take it across to Maithili Busnurmat, Neeraj, you did mention that things will begin to look up from the second half of this fiscal. The total growth for fiscal 14 is 4.7%. Do you think we can get back to 6.5% this year, or are we going to actually see levels sub 6%?
Our house forecast for next year is a growth of 5% for the full year. Now, bear in mind that we are forecasting somewhere close to 4.6% of growth in the first two quarters of this current fiscal, and then we expect the growth to pick up to 5% in the following quarter, and say about 5.5 or closer to 5.75 for the last quarter of this fiscal. So we do feel that the growth would probably average at closer to 5% for the full year. We do feel that the real growth upside will come in fiscal year 16, when we think that the growth could actually inch towards 6 or maybe closer to 6.5%. But we'll have to see how things play out between now and the end of the year. But as we speak, it does feel like that for this year we'll probably be closer to 5 rather than 6.
All right, we've got our very special guest joining us as well. Maithili Busnurmat is here, and so is Dr. Subir Gokar, Director of Research at Brookings India. Thanks very much, both of you, to be with us. Mr. Gokar, if I may come to you, sir, 4.7% for the entire fiscal, 4.6 for Q4. Is the worst behind the Indian economy?
Well, I think we had an advance estimate of 4.9 for the full year, and now what we've got is something around that. Q4 is 4.6. FY14 is 4.7, so slightly below the advance estimate, but not that dramatically different. So I think what we are seeing here is sort of settling in at a kind of bottom. This is the kind of growth that we should expect to see when there is relatively low motivation to invest People are generally uncertain about the future and are waiting to see what happens. So having found a bottom, and keep in mind that the last time we were in this kind of trough was perhaps from 98 to 2002, when very little was happening by way of new investments and so on. Agriculture was very sluggish. That was adding up to about a 5% average. So we seem to have settled somewhere in that region. So it is now contingent on what the policy response is. What does the government do to stimulate investment? What does it do to bring inflation down so that interest rates can once again become a growth inducing factor rather than a growth retarding factor? All of those things are important. So I think we have to leave this behind. We understand where we are in terms of having settled down at the bottom of the range, and we have to anticipate focused and effective action by the new government in doing things that will get the growth rate back up. It's a long haul. It's not something that is going to change overnight. Many actions need to be taken to address very, very deep-rooted structural problems, and that's going to take time. I think we've got to be very realistic about the pace of recovery as and when it takes off. I think as we did in that period that I referred to, 1998 to 2002, we need to lay the foundations for a spurt and a sustained spurt of faster growth over a period. So those are the things that I hope that this new government will be heavily engaged in.
You know, it's interesting that you speak about the new government, because that was my next question. And before I go to Maithili and hand it over to her, I would want to ask you this question. Most of the people that we spoke from India Inc., where the sentiment seems to be turning around with the new government, believe that it is going to be the growth supportive policies that will really put investment back on the table. Do you think the investment community will wait and watch what the real concrete measures are, or will positive talk really do much of the work?
I think it's a combination. I think there is certainly a need to be seen to be moving in the right direction, taking the right steps that will help to ease some of these structural problems over the next few months or years. And that then gives people an incentive to start investing, because investment also gives you returns after a lag, don't forget. So, you can't wait till everything is in place to invest because you may be the last one in the race. So I think confidence is very important, doing the right things, saying the right things, matching words and action. All of these are very, very important attributes that the new government must recognize to be able to not only inspire confidence, which seems to have happened already because we have a majority, because we have a government that has been talking development and governance, but also that to keep that momentum going, a series of actions, a series of steps that are consistent with this larger goal. So that is a mutually reinforcing process, I think, and that's really what's really, if it works that way, that's really what's going to get us back onto a growth accelerating track. Where that takes us is, I think, not even necessary to predict. I think what we need to see now is the reversal, the change in direction that is the result of the government saying and doing the right things, and industry or business taking comfort from this, drawing some confidence from this, and beginning to increase the level of investment.
Fair enough. I have a question for you, and I'm going to put you on the spot as far as that number going ahead is concerned. But let me welcome our other guests as well. Gaurav Kapoor, Indraneel Pan and Anand Tandon join us while we were doing that discussion. Gaurav, if I may come to you, 4.7% for fiscal 14, a new government in place that seems to be growth-centric, that seems to be more decisive. It has a clear majority. Sentiment perhaps beginning to change on the ground. Investment will perhaps break ground finally. What's your sense? Is the worst behind us? And if these are the numbers to go by, and with the scenario that we are now in, will India continue to still grow at 5%, 5.5%?
Well, the worst does seem to be behind us. If you see, since September last year, there's generally been a positive momentum in the economy. You've seen first, you saw the external vulnerability kind of being significantly, we've managed to reduce that. You see the current account deficit for the last financial year came down at 1.7%. Rupee has stabilized, it's been appreciating. RBI has actually been building reserves on top of that. This, while I think on the growth front, clearly last year you saw farm sector and exports largely driving growth with consumption and investment lagging. Hopefully, I think this year, given the fact that the momentum and the sentiment has changed, and it's largely, and now with the new government in place and with the kind of majority it has, and with the overall business sentiment kind of improving, and the efforts being made to push the stalled investment projects over the last 9 to 12 months, all of that should start yielding result hopefully in the next 6 months. But I think we would still see growth not more than 5.5% for the whole year, because one, there is not enough policy room space either from the monetary or the fiscal side to really pump prime the economy. In stimulating investments is going to take time, and I think while the groundwork now is in place on the external side, we've clearly managed to live through somewhat of a crisis. We've come out fairly strong out of that. Inflation remains a challenge, and that needs to be controlled as well. So overall, I think you need structural reforms, you need policy reforms, you need to lay the ground for better growth in years to come, better in terms of not only higher numbers, but growth which is sustainable, does not necessarily, and comes with a somewhat stable level of inflation. So I think while we are out of a slow patch, the pace of recovery is going to be slow. We do not yet know the impact, by the way, of the El Nino and the impact of that on growth, though in the last 4 episodes of El Nino, and even the last episode in 2009-10, where there was a 23% deficiency in rainfall, the farm sector actually still showed positive growth. So hopefully, if that continues and you see growth somewhere in the farm sector around 1.5%, you see a recovery in manufacturing on the back of very low base in the current financial year, and some pickup in services, you would see a number perhaps closer to 5.5%. And I think with the kind of right policy framework being set in place, issues around taxes being, for instance, taken care of, steps being taken towards moving towards GST, and overall improvement in the investment climate, and a global environment which is a lot more conducive than it has been in quite a while now, should help us achieve or move towards a 6.5% growth in the next fiscal year. But I think for this fiscal year, I think growth at 5.5% would perhaps be a job well done. I think be better than what otherwise, with all the kind of risks we still run, I think 5.5 would be a good performance.
Subir, the overall GDP numbers are more or less in line with what everybody expected. But what about industry and manufacturing? This year, if we do get affected by El Nino, then we're not going to see that kind of agricultural growth. So will manufacturing be able to take up that, and boost the economy, take up that slack?
Well, I think the key to manufacturing, as we've been sort of realizing more and more in the last year or so, is the combination of infrastructure deficit, you could say, which has impeded further investment in the private sector. Also combined, of course, with all of the decision-making issues, the whole policy paralysis argument that people have made. And if we don't see food inflation coming down, the one key deterrent to manufacturing recovery is going to be high interest rates. So we've got to see some action by the government in terms of starting to push on infrastructure, to push on decision making. That will provide some boost to manufacturing activity, because it'll stimulate investment, which obviously helps manufacturing. But on the other side, if we see food inflation becoming aggravated by a possible monsoon failure or certainly inadequacy, then I think the Reserve Bank's room to maneuver is going to be somewhat limited. It certainly will not raise rates in response to a food inflation, the food price spike, but it will make it that much more difficult for it to bring rates down. So I think we've got to see a combination of factors on the policy front in terms of infrastructure and decision making, and on the financial front in terms of interest rates coming down, in order to give sort of renew momentum to manufacturing. If the monsoon fails, that is not going to be an ideal situation from the manufacturing viewpoint, and obviously we're going to see much more pressure or much more resistance to a recovery. But if the monsoon is adequate, or if the agricultural sector does not get too impacted by a geographically sort of variable monsoon, then I think what the government does in terms of agricultural policy, for example, an immediate step that the government needs to take, I believe, is to ease the pressure on rice prices. Rice has been a major source of inflationary pressure the last few months. To release stocks into the market, I think that's a decision they can make very quickly, and they should do it. If food inflation starts to trend down, that opens up the room for interest rate reductions over the coming months, and that's certainly going to be a stimulus for manufacturing over the next year.
Indranil, one of the problems really has been that private corporates are not yet really willing to take the plunge, and there's very limited scope for counter-cyclical public policy from the government for public expenditure. Given the fact that this would now be the 8th consecutive quarter of sub 5% growth, what does this mean in terms of government revenue and in terms of the fiscal deficit? Will government really have the wherewithal to do any kind of push unless they really take drastic measures to cut things like subsidies? And do you see that happening?
It's a very difficult call at this point in time, and given the type of growth trajectory we have seen, there's anyways a significant contraction that has happened on the revenue side, especially the tax revenues. So a lot of reliance on the revenue side has been on non-tax revenues such as disinvestment receipts, telecom receipts, etc. And there obviously appears to be very little room on the expenditure side in terms of the contraction that we would want to see if the fiscal contraction needs to happen. So overall, I think in terms of the revenue strategy, there is a clear direction in terms of introduction of the GST, the DTC, which should be which should be on the agenda of the new government, and that is the only way possibly you can actually endeavor to push up the revenue side in a significant way, and therefore help contraction in the overall sort of fiscal deficit going forward. Otherwise, I think it could actually prove to be quite difficult in the current scenario that we are in terms of pushing up the revenue growth.
Neeraj, Indranil spoke of GST being one important way of ensuring that revenues look up. But the fact is that even though the BJP has a good majority in the Lok Sabha, it doesn't have the numbers in the Rajya Sabha. So do you think the Congress will play spoil sport and not cooperate? And in that case, what happens to GST? What will the government do to raise revenues?
So, slightly difficult question as to how the government will actually maneuver its way into the parliament on some of these important legislations that need to go through. Clearly, they have a majority in the Lok Sabha, but they don't have the sufficient numbers in Rajya Sabha. I think important thing is at this point in time to build the consensus amongst the states, which has been lacking in the past, and to drive the hard bargain that is required to be driven, and to arrive at the consensus amongst the states and make sure that we have the state level buy-in in order to implement GST. I think once you get there, then it becomes relatively easier to build that consensus amongst the opposition parties as well. So I think that's very crucial, and in that context, the new sort of federal state sort of partnership that the government has talked about is extremely important. Remember, in the past, one of the biggest hindrances around getting the states to sort of agree to a GST framework has been the loss of revenue at the state level, and how the center will sort of compensate these states for this loss of revenue. So I think you need to sort of step up and sort of assure the states that if there is a loss of revenue, then the center will be forthcoming in terms of bridging that revenue gap and making sure that the states are not necessarily worse off. And overall, it should actually enhance the tax compliance in the country, and overall there should be a revenue pickup. Whether that happens at the state level or the central level, there should be sort of set-offs between the two. So I think building a state level consensus is the first step. And then, and remember, there are still a number of states which are being sort of governed by Congress. And once you have, those states as well signing up for GST, then the process at the Rajya Sabha and Lok Sabha level, certainly at Rajya Sabha level, probably should become a little easier than what it appears at this point in time.
Anand, if I could turn to you now. On the domestic front, we seem to have enough trouble and more, except for the fact that now we have a stable government with a clear majority. There seem to be very few positives. Can we look to the external sector to provide just that glimmer of hope? The US data suggests that the first quarter seems to have contracted, but can we hope that this is only a temporary blip because of weather conditions, and actually the external sector will look bright and come to our rescue?
Well, I think, most of the problems have to be sorted out internally. The external sector is not large enough for it to make that much of a difference for us overall. And I think if the economy were to actually revive in some form or shape, you may actually find that imports are actually picking up. Perhaps the exports have already done quite well, and if the rupee were to stay where it is, it's not going to be benefiting the exporters that much. So I think the focus for the government has to be on the internal sector. I think the major issue has to be in terms of making sure that the fiscal deficit is not necessarily just lower, but it is coming from a better source. I think most of the money that is being spent can be better utilized. I don't think at this stage it makes sense for the government to actually cut back on expenditure, just redirect it and make it a little more efficient use of that.
Anand, you spoke over a very vital issue, the fact that the major part of our fiscal deficit is actually revenue deficit. Now, will the government be able to backtrack, because the UPA government had not bothered about the composition of the fiscal deficit? How easy will it be for the NDA government, for the BJP government, to really backtrack and ensure a right mix of the fiscal deficit?
Well, I think it is not that difficult administratively to improve the quality of the expenditure. As of today, if you see, even a simple thing like computerization of most finance departments of states has not been achieved. You'd be surprised, most states do not know how many employees they have. And this is something that I know from experience. I consult for one state government, and I find that, and this is one of the more technologically advanced states. So if you don't even know what's the total salary bill, I don't see how you're going to be controlling any of the expenditures. There are places where money is kept parked because you are afraid that if you let it lapse, it won't come back to you next year. So there are actually huge areas of financial improvement that can be done at the state level. And these are not small numbers. These can run into tens of thousands of crores for each state. So, it is reasonably easy for a good administrator to actually tighten the screws in terms of where the money is being spent. I think at this stage, if we start looking for fiscal consolidation in the sense that of reduction of government expenditure, it will actually slow down the GDP, which is not the point that one wants at this stage. However, do you necessarily need to spend the money in just digging a hole and filling it up? Or can you, for example, allow use of mechanization to build roads so that the NREGA program can actually deliver an infrastructure which can sustain, rather than, for example, just getting washed out in every monsoon? So there are many things that the government can do at an administrative level. It will not be something that will excite the market because it may not be very visible. But at the same time, I think the quality of infrastructure can improve, and you may actually find that the deficit can be brought down over the slightly longer term, and the quality of the expenditure can significantly become better.
Mr. Tandon, thanks very much for giving us that perspective. But I'm going to take this to Gaurav Kapoor. Gaurav, Mr. Tandon spoke about rationalization of expenditure, and one such rationalization will have to be to deal with the mounting subsidy burden. The NDA government in its past avatar had decontrolled petrol, diesel and all such commodities. Do you think the government, with the majority it has, and the reformist agenda that the BJP is largely, held responsible for, will they have the wherewithal to go ahead and deregulate diesel completely? How do you expect this government to deal with the subsidy burden?
I think it's very clear. Anybody at this point in time, it's the challenge. In fact, even the UPA government had started the process of gradually moving diesel prices. In fact, gradually allowing increase in diesel prices. Now the under recoveries are about 4 rupees, 4 rupee 40 paisa, and that's under recovery is actually largely on account of taxes. So I think it's quite clear that fiscal consolidation, given the kind of non-discretionary, to a large extent the spending of the government is committed and non-discretionary. So you have to control subsidies. There is actually no other way. And I think fuel subsidies over a period of time, you've seen the governments, gradually increasing prices, and I think that's kind of become accepted, it's become easy. And I think to the extent they can communicate what is being done and why is it being done, I think it's possible to do it. I don't, but I guess there is no choice. You need to curb subsidy as a percentage of GDP. There is a cap of, UPA government wanted to put a cap of 2% of GDP, and I think that's fairly reasonable, and you need to and the other essential element is targeting of subsidies. So that's the other step which you need to think through. You need to not only reduce the subsidies, the size of subsidies, you need to make sure subsidies are better targeted. And I think with the kind of strength they have, and with and if I remember correctly, they did dismantle the administrative pricing regime in the previous stint. So I think the intent is there, and at this point in time, given the kind of stress, with the kind of slow growth, the stress on the revenue side, and given some of the committed spending, I think, and given the fact that there is to a large degree now consensus that subsidies need to be curbed in a time-bound manner, I think that it's possible to do it, and along with the fact, of course, that they need to kind of also take measures to control inflation, control food inflation, so that the pressure on the end consumer of subsidies being taken away is somewhat eased out, and at the same time go ahead with the reforms which are long pending on the taxes front, like the GST, for instance. So it has to be a strategy, an overall strategy with various elements to it. It can't be a one-off standalone thing. So I think if it's done in a coherent manner, then I think it's possible to control subsidies and control inflation, which helps ease the burden, and at the same time introduce tax reforms which over a period of time improve the overall quality of finances.
Dr. Gokul, if I may come to you, one such measure that the government may want to look at is the whole divestment process to increase its revenues. The UPA government tried to do a lot with the IOC, NTPC, ONGC kind of Navratnas, didn't really meet much success. Each time LIC did a huge bailout. What's your sense? Because there's such euphoria in the markets, are the markets ready for big paper to come in from these public sector undertakings?
I think so. I think the compulsion, the fiscal compulsion is enormous. Not only, Maithili made the point about revenue potential in a slow growth environment. Obviously, that is going to be a huge constraint. You can't expect revenues to spurt in a situation where growth is not is going to take some time to recover. So you need to find every possible means of enhancing the inflow into government, and this investment is one very important one. Not only are we talking about, I would like to club it more or categorize it more broadly as asset sales. We have possibly disinvestment from public enterprises. We have the SUTI, the special undertaking of the Unit Trust of India, which has a number of blue chip stocks in its portfolio, which we've been talking about putting back into the market, but that hasn't happened. I think that's an opportunity. But also all of the other assets that the government is now talking about selling, spectrum, mineral rights, land, what have you. I think all of this needs to be treated as what I'd call a balance sheet swap, which is that if you sell assets, then I think it is incumbent on the government to use that money to create new assets. And that is how I think we're going to get infrastructure, the infrastructure program, both through funding and through execution, back on track. So notwithstanding the constraints on the fiscal front in terms of revenue potential, I think we've got to make a break from the old tradition of clubbing all capital receipts into the general budget. I think we've got to start dedicating and ring fencing capital realizations, sales of assets, whatever assets they may be, to ensure that these are then dedicated to creating new assets. Because if we don't do that, we might reduce the fiscal deficit, but we are not going to redress what I think is a much more significant imbalance in the fiscal situation, which is the share of capital spending out of the total government expenditure, at least at the central level, and I'm sure this trend is visible at the state level as well, has dropped considerably over the last 5 or 6 years, from a peak of something around 23% 6-7 years ago to now 11-12%. So if the government is not spending money on asset formation, we've lost the infrastructure battle very early in the game. I think it's very important for the government to get back into this picture, get back into the game on infrastructure. and use the resources it raises from selling other assets to finance infrastructure. That's a compulsion, that's an imperative. If that happens, I think we should be able to then create conditions over the next 2 or 3 years for private investment to kick in. Infrastructure always catalyzes private investment, and I think that's really the way that we're going to get out of this sort of low investment trap. 31% GFCF, gross fixed capital formation, that is 31% of GDP, is not a bad number at all. But keep in mind that in the 2003-2008 period, we were getting 8.5–9% growth, investing 33–34% of GDP. Now we're getting 4.5% growth, investing 31% of GDP. Why is that? Why is capital efficiency dropped so dramatically in the last 4 or 5 years? The simple answer to that is because capital efficiency depends heavily on the quality of infrastructure. And if we see the quality of infrastructure deteriorating, we're really not going to get the same bang for the buck from our investment in any other sector. That is an equation which I think the government has to keep very firmly in its mind as it works through the fiscal strategy.
Internally, Subir spoke about the huge need for infrastructure investment and also about how disinvestment could provide the revenues. But I think what most of us have lost sight of is the unkind parting shot from the UPA government in terms of the 7th Pay Commission, and also the fact that the Finance Commission is due to submit its report this year, and that could hugely change the amount of money that comes into the central government's coffers. How do you think both of these will impact the fiscal deficit and the government's ability to invest?
I think that's a very important point, and given the fact that we have seen what is the type of mess that was created on the fiscal through the 6th Pay Commission, that becomes a relevant point. I think along with the subsidies also and these issues, the interest payment bill needs to be also be taken care of, in the sense that if every year the government tends to borrow about 6 trillion of rupees, the interest payment with the interest sort of payout from the government being at a relatively higher level, I think that is another issue that really has to be addressed in terms of the revenue expenditure front. So what ultimately we are all saying is that the fiscal challenge is one of the most important challenges at this point in time. Yes, there has been a contraction of the current account deficit, as Gaurav pointed out, but that has not really translated itself to a contraction in the fiscal challenges, and which is the next step that the new government will have to look at. And to that extent, I think it is very difficult for the new government to sort of determine a growth trajectory higher than the current growth trajectory immediately. It doesn't have a magic wand to do it. It has to take up the issues step by step. I think what Subir said was also extremely pertinent in terms of not only the amount of resources going towards infrastructure, the way we need to utilize our PSU disinvestment receipts for infrastructure, clearly earmark it for infrastructure purposes, and most importantly to sort of enhance the productivity of capital and the productivity of labor. And if these certain things do not happen, even the manufacturing sector doesn't really get a chance to grow significantly.
All right, Indranil, thanks very much for that quick answer, but completely out of time here. On this edition of Business Day, we've been discussing the Q4 and the fiscal 14 GDP numbers. Experts do agree the worst is perhaps behind us, but they caution us nonetheless. Thanks each one of you for being with us, and thank you viewers for joining in.